Here is the weekly outlook for this week. Let's start off with the fundamentals and then we'll move on to the technical side. So this week is inflation data week, CPI, PPI, and retail sales. Over the weekend, Trump slapped a 30% tariff on the EU and Mexico effective August 1st. The market initially thought that he was just bluffing. He was just sending out these letters, talking about sending out letters, said that maybe he'll do it, maybe he won't. But obviously, he's not bluffing anymore. For the last couple of weeks, investors have been riding a wave of optimism where we saw that the US dollar was gaining strength. We saw intraday US 30 buy opportunities tapping into the same exact weekly and monthly resistance levels. We saw gold dropping back down. But this weekend's tariff salvo is a real volatility trigger, and we are expecting when the markets open up, they'll be on edge. And now there's an even bigger wild card, which is Trump may try to fire Jerome Powell, adding a new layer of political risk that could cause about a 3 to 4% USD drop and a Treasury sell-off. This week being inflation week with a lot of CPI data that's going to be coming out, PPI and retail sales, we're expecting that core CPI is forecasted to jump to 2.9% year over year in June, which is going to be its first uptick since January, which is mainly driven by early tariff pass-through on goods like furniture and appliances. So now the retailers are hesitating to pass on the cost, but inflation is brewing underneath the surface, which we have been seeing when we're looking at the DXY, when we have been looking at US 30, gold, and a lot of the other safe haven assets and currencies. So starting off with US 30, from a fundamental perspective, we have been seeing that US 30 is mainly loaded with exporters such as autos, pharma, industrial sectors, all directly hit by the tariffs. And so we are going to be seeing majority of those movements being reflected onto US 30. From a sentiment perspective, the market is mainly skeptical of Trump, but if these tariffs are enforced on August 1st, then margin compression becomes real. So what we're going to do, the main thing is watch out for how the market opens up. We're expecting that there's going to be a bounce off of these recent swing lows opportunities, which starting off with the monthly and then coming down to some of the intraday timeframes. We see that price has already rejected again into those monthly resistance levels, which is coming up into that 44,900 or 45,000 area flat. Come down to the weekly, we see that rejection happen 2 weeks ago, and then last week we kind of made a top wick and pushed back down. So here I'm going to mark off the support that's being formed here on the weekly time frame, which is that 44,100 mark. As you drop down to lower time frames, you can absolutely adjust these levels and bring them in and really target which are going to be your main consolidation areas. So based off the daily time frame, another level that I'm going to mark off, which is going to be the mid-level range, which is going to be this 44,400 area, which is that consolidation right here on the daily time frame. And then down here, you have these rejections with these candle body closures happen and then a bullish push back up. That's exactly what we saw happen here recently as well. And then the last daily candle closed below this area. So we're expecting this new daily candle to make a top wick and then continue pushing down. So we can look for a trade at least down here. But if price breaks below that, then the next target is going to be these daily bottom wick rejections here. Come onto the 4-hour time frame and we start to see how the volume dies down a little bit on the previous 4-hour candles. And then the last one closed, barely breaking the previous high or even the low, just kind of hanging around in this range. So what I'm going to do is mark off a zone. And for any sell opportunities to be valid, we need price to continue breaking below this area. So then we have sells coming back down into that 44,200, 44,100 area. And then if price just bounces off of this, establishes a support, then we're looking for buys to come back up. And it's a range to range trade that we're looking at. Now let's come over to GBP USD. So from here, both GBP USD and Euro USD are sitting in quite similar market structures, and both of them from a fundamentally perspective are exposed to trade retaliation risk, which right now we're seeing that the EU is in panic mode trying to finalize some sort of a deal with the US. And then from a market sentiment perspective, we know that the US dollar has been strong near term, but Powell's dismissal risk also adds a downside tail for the dollar. So here looking at, let's start off with the weekly time frame with GBP USD. We have that resistance on the weekly time frame, which is sitting at that 1.373. And then last weekly candle had massive bearish momentum to the downside. And then over here, we see every time price taps into it, we see some sort of a sell-off or a massive bullish run up. So here, for example, if you just zone out, we see that price consolidated and then a massive bearish pressure to the downside. Here, price held onto this area of support and then a bullish run up. So it's a very strong support and resistance level historically. and that's going to be your 1.345 area. Drop down to the daily. Again, a pretty nice sell-off opportunity. What I want to see here is price giving me some sort of a corrective move and then continue to push down. But because of the massive risk-off sentiment from this past weekend's news, I am expecting price to continue pushing down. As it breaks these lows, then I'm looking for those sell opportunities. But the sells are only going to be valid below this 1.345. Any buys would be an established support and then a push back up. Same thing on the 4-hour time frame. You want an established support and then a push back up. Euro USD is pretty much the same thing, so we're not really going to go over that. And then the next thing we're going to go over is going to be GJ. So I just gave you guys the fundamental aspect for Euro USD as well, which is that, again, it's exposed to the trade retaliation risk. And then also the short-term dollar strength with Euro USD. It is currently overstretched, just like how GBP USD is. So it's the same exact market structure. With GBP JPY, we are seeing that the yen is currently soft, but so is the pound. So there's tariff pressure on both pairs. And right now, this is a very risk sensitive pair, so there's no conviction just yet. Trying to figure out what is the direction, especially as prices is simply rejecting into these weekly resistance levels, which is at 198.8. And then we're going to mark off support, which is right around here, because we see price tapping into it and then a sell-off, and then we kind of came up above this area, held onto a break and retest kind of a setup. So we're trying to see if we're going to get some better momentum here, or are we just going to reject that 198.9 and then push right back down. You come onto the daily time frame, we try to break above that area, but as you can see, we're kind of just hanging around here, and that's why there's no clear conviction on which way price is headed. For any buying opportunities, we're looking for price to establish that support right here and then continue that bullish momentum to the upside. If not, we're looking for these daily lows here to be broken and then continue back down. You come onto the 4-hour time frame, you have this entire consolidation here. So if you want to narrow in your levels, your sells are only going to be valid below this, and any buys is established support and the break of this high and continuation back up. Let's come over to gold. Gold is currently, from a fundamental perspective, caught between rising yields and then also the growing inflation risk. From a sentiment perspective, we see that there's dollar strength, which has been capped at the upside, but Powell firing plus CPI beat is going to give us a better gold breakout trigger. From a technical perspective, I'm going to mark off the current top wick rejections that we have on the weekly time frame, which is going to be 3371.2, and then you have bottom wick rejection right here. And as we drop down to lower time frames, in the past week, we saw a ton of consolidation just between this range here. So coming onto the daily time frame, we saw that nice sell-off that happened, and then after that, price just kept bouncing into this. So this is another example of that zone-to-zone trade, especially like US 30, that we have been looking at and trading this past week. So if we're looking for any buying opportunities, we want, again, a break of that 3371 and then continuation to the upside, potentially to come back and tap into these all-time highs as price has 1, 2, and 3 times. And then if we're looking for any sells, we want to establish resistance and then a push back down. Come on to the 4-hour time frame. We got a nice top wick rejection and then a bearish candle closure. Last 4-hour candle, not really breaking the highs or the lows. So for any sell opportunities, we want the 4-hour lows here to be broken and continue to the downside, targeting around 20 or 32.90 or 32.85 area. For any buys, it would be above 3371.2. So this week is going to be quite straightforward when it comes to, from a technical perspective, since price is sitting at those daily, weekly, and monthly resistance and support levels. So now we're looking for a clean break and retest opportunities. We're looking for established support and resistance levels to be formed. And the key catalysts this week are going to be, of course, the inflation data that's coming out, and then plus any sort of trade deals that might happen. So those are going to be the two things that we watch out for. And then going into the end of the month, we are leading into the FOMC meeting and the interest rates. So right now the expectation is that we are just going to hold on to the current interest rates, but we are going to be watching for the tone of the central bank and seeing if there's any indications around potentially dropping more interest rates coming into September or even to the end of the year, and if we are still holding on to the 2 interest rate cut projection. Other than that, I hope you guys have a great rest of the week. And as always, feel free to reach out to me on Instagram at SharmaFX if you have any questions.